The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it is to provide you with the tools to help you lead an inspired life, because leading an inspired life, folks, that is what it is all about. So let's go take a look at one of our tools. This is the tool that I call wishing for the right thing, folks. Now, when it comes to skills, think of it like this. Don't wish it was easier. How many of you, when it comes to skills, you say, I just wish this were easier? Instead, folks, what you should be wishing for is wish that you were better. Step up to the challenge. Don't wish for less problems, folks. What you want to do is wish for more skills. Don't wish for less challenges in life. Challenges are what it's all about, folks. Wish for more wisdom out there. Now, you've either got to modify your dreams, and who wants to modify dreams, or you've got to magnify your skill set. I think it's all about magnifying your skill set. Remember, folks, you can cut down a tree with a hammer, but if you get an axe, it's the difference between 30 days probably and 30 minutes, folks. That is what I call skill. So the key to life, folks, is just simply become more skillful out there. So hopefully everybody out there had a great weekend out here. Let's go take a look at these markets. What I've got up on my screen here is the ES Mini, the 30-minute chart. If you are watching us on TigerTV, folks, you'll be able to see our charts. If you're listening on the radio, maybe you're listening because you've got bookmarked tfnn.mobi on your mobile device. You can always catch an archive of this show on Channel 9. And what we're looking at here, we're taking a look at the 30-minute chart. We're taking a look at an area that should be very strong support inside the 30-minute chart. Why? Because what we have is we've got a couple of Fibonacci expansion and contraction numbers all coming together in the same spot. And so that's a beautiful thing, because we're either going to learn from failure or we're going to learn from success. Now, when we take a look at the expansion here of swing points, what you're seeing, I'll go ahead and blow this up on my screen. What you're seeing, folks, you're seeing two expansions of swing points. The first one is the most recent swing point. That came in at 1:30 this morning. 1:30 this morning here, when the ES Mini traded down at a low of 14.1425. The difference between that 14.1425 and the high that the ES Mini made at 5:30 this morning, probably most of you were sleeping out there, that high out there is 14.18. If you take that dollar difference, multiplied times 1.618, subtract it from the 14.18, that's going to take you to the price point that it got down to here as we were coming down to the show at 9 o'clock. That low, 14.12. So you see a 1.618 expansion of a swing point. You also see a 1.272 expansion. The swing point that's an expansion of happens to be the 2 o'clock in the afternoon time frame on Friday, when you had the ES Mini out at 14.13. What else do you have going on out here? Well, if you come back to this swing point right here where the market moved off of the lows, that was at 10:30 in the morning on August the 16th out there. I think that was Thursday. I'm pretty sure it was Thursday. So when you take a look at the market, that's what I'll call, if we're looking at this chart here, that's a major intersection. It's a major swing point out there. And you can take a look at that 0.382 retracement that it's done. So you've got a 0.382 retracement, a 1.618 expansion, a 1.272 expansion, and it's made more than a 0.786 retracement. It's actually gotten inside that swing point that was from 8 o'clock at Friday, 8 o'clock in the morning out there. So the level that the ES Mini is at, a very critical support area. Why is it critical? Well, if it fails there, if you fail where you've got all of these Fibonacci retracement and expansion numbers coming, what it's going to do is it's going to move down to the 0.618 of that larger move. You're at the 0.382 level. What's that area? pretty easy. All we do is we take our Fibonacci expansion contraction ruler. We're going to go from that low that came in at 10:30 in the morning on August the 16th. We're going to go all the way up to the high that was made at 5:30 this morning. What you can see is that area is 1407. So figure 1407, 1405. That's the next area of support if this area here breaks. Now, what you don't see in this 30-minute candle, we're on a 30-minute chart. So when the market opens at 9:30, it's going to give us some kind of indication if you've gotten some type of bullish candle as you've gotten down to that 0.382. You don't have a bullish candle. What's that set up? It sets up lower price in the ES Mini. Our call-in number, folks, 877-927-6648. As we take a look at the other markets here right now, you've got the Dow futures off about 24. We'll go take a look at the daily charts on that. You've got the ES Mini. It's just down a couple of points here, so nothing great, but it is important to be able to identify the support areas here and resistant areas. You got the NASDAQ futures trading up a couple points. Russell 2000 down a buck, so we could pretty much go water skiing on the Russell and on the ES Mini. You've got King dollars up 12 cents right now out at 82.67. That rejected lower price early this morning. Gold pulling back a bit. It's down $4. It's trading out at 16.16. Really, gold and silver haven't moved too much here over really the last several weeks out here. You've got silver up about about 3 pennies out here, trading out at $28.03. Light sweet crude off 15 cents. You've got natural gas up 4 ticks out at 22.76. Let's see what else we have. How about Germany? The DAX. Let's take a look at the DAX. The DAX down 2.5 points right now, and the FTSE off 24. So let's switch over to what's going on around the world, because that should give us a pretty good indication as to whether or not these markets are trying to bust out the highs. Now, we know that this 0.786 Gartley pattern here failed. This 0.786 Gartley was right at the top of this open window, this gap down coming into the April 4th area. And once that window got closed, or maybe, the window then broke. So there was an area here of resistance inside the DAX. It happened to be the low of April 3rd. That low, 69.81. Once you closed inside there, and it had been rejected, but once you had closed inside there, and really you closed inside there on Thursday, once you did that, it's like, if you have a broken window at your home, the window's still open until it's fixed, until it's repaired, right? Well, in the case of an open window here or a gap down, once you close inside it, it's like fixing your window again. So that window no longer an area that I take a look at as far as support or resistance out there. However, the top of the candle where you began the downdraft, that's a swing point. And that is, so if you take a look at that on the DAX, that is April 3rd. The high of that is 7,081 and 6 pennies. What did the DAX do so far this morning? The DAX getting up to a high of 7,086. So it got up and over, and it didn't like that view. It's trading not at the low of its session, but it's certainly trading towards its session lows here right now. So at this point, it has rejected higher price. Now, let's just go ahead and erase everything off this chart, because we can always draw lines back in. In fact, I suggest that when you are charting, that what you do is every couple of days, just simply clean the lines, come back at the chart, look at it as if it was a brand new chart to see what else it is you might see out there. So if we just simply take a look at the price, let's go back the other way. Let's see what else the DAX was running into. Let's see if I can do this here. There we go. And so what you can see is the DAX was also running into... give me a second here. I got to see what it was running into. So it was running into also the swing point from March 27th. So March 27th, the DAX actually got into that. It has rejected that swing point. The low of that is 7,075.16. I would say that's a number that you want to write down on your pad of paper for the 11:30 time frame to get an idea for where the DAX closes out there. The DAX has got another level here of resistance, but it's all the way up at the March 16th level. That March 16th shooting star swing point out there. The high of that is 7,194. The low is 71.42. Right now, the DAX failing at the swing point. Really, 2 swing points. It tested the high of April 3rd. It has tested the low of March 27th. Probably March 27th is a date you just simply want to write down on a pad of paper as we switch over and take a look at our marketplace. But let's continue as long as we're touring the world here. Let's go take a look at the FTSE. Let's see what the FTSE is doing. That is down 23 points right now. We take a look at the FTSE The FTSE getting up. Let's see what the FTSE actually was testing here, because I haven't looked lately. So the FTSE here testing the swing point, it looks like sure enough. So the FTSE's got a swing point from March 27th. I mentioned, hey, why don't we write down March 27th? So now you've got the markets here synergistic, if you will. And the low of that FTSE number is 58.63. Now, you didn't get up into it this morning. What you did is you got up into the number, you got up into that swing point on August the 14th. Let's see here. Did you get up into it on August the 15th when you sold off? The high was 58.64 out there. And let me see, what was the low here? 58.63. So sure enough, you did. So the FTSE has tested that March 27th area. It is trading, the FTSE, at the low of its sessions here right now. If we take a look at ABCD patterns, let's see, did the FTSE complete that? We're looking at an ABC off of the low from June 4th. That would be your A point. Your B point would be up at June 20th, and your C point would be down around June 26th time frame. So sure enough, it has finished a 1-to-1, A to B equals CD. Its work at those swing points, the March 27th area, has been completed. Also at April 3rd, so that April 3rd area didn't test the highs, certainly did test the low, and you're trading below that right now. If we go take a look at what else went over, and how about in Asia? Let's go take a look at the Shanghai out here. The Shanghai trying to bust out the lows, and the lows that I'm talking about, it's already busted out one set of lows, that low going back to January 6, 2012. The next set of lows that the FTSE, or not the FTSE, that the Shanghai here is trying to take out are the lows, most recent lows from August 1st. That low is 2201.89. You got below it this morning. Looks like you tested it on lighter volume. Looks like that volume was 53 million shares, again, August 1st. Today, what you did was 46 million shares. I still believe the FTSE, or the FTSE, I keep saying the FTSE, the Shanghai wants to travel lower, mostly because of the larger pattern that's out there, the larger weekly pattern that is out there. That says what the Shanghai, got it right that time, what the Shanghai wants to do is get into that 2120 level. Let's go take a look at the Nikkei, see what the Nikkei has done. We drew the butterfly pattern that the Nikkei is trying to complete. That would get the Nikkei up into about the 9,300 and change level. The Nikkei did make a higher high, closed towards the middle to the bottom of its trading session out there, closed out at 91.71. The Nikkei was up only 8 points out there. Again, 877-927-6648. Let's go take a look and see what's going on in the currency marketplace. So let's go over to the euro. Of course, that's where we're going to start, at the Queen. And we take a look at the euro. It's trading out right now 1.23. 123. You got to love it. The euro here made a... is making an A to B equals CD down pattern. Now, this is the 30-minute chart. Let's go see if it has completed that. Let's get rid of these lines. The A point on the euro that we're looking for started out on the 30-minute chart at 5:30 in the morning, August 17th. I believe that was Friday. The B point happened to be while I was on the show with Daryl Martin on the Nadex Bull Bear option hour on Friday. And so it made that low. That low was out at 1.22878. I believe we went long on a trade then. We went long at about 10:30 that time frame. So the the euro here trying to complete an A to B equals CD. That would take you into the 1.227 area here. If we take a look at the candles out here as it was making this low, testing this 100% move of a move swing point. Let's see, was this a bearish engulfing? It should be, the way that the currency trades. Let's see, the low 1.22968, 1.22. No, it certainly wasn't. 877-927-6648. Give us a call, folks. Would love to hear from you. Hope you're having a great Monday already. We'll be right back.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Futures, again, not really changed here since we went for break. So let's go take a look at some areas here. Important day in the markets for sure. It is also a planetary index date. So we've had a lot of celestial aspects, lunar aspects, back to back to back. We had today's not the actual P-index date. It was actually yesterday, Sunday, when it came in. But today, obviously, is the first trading session out there. So let's go take a look at the markets. Let's go take a look at some resistance areas. Let's start off with the Dow futures, see what the Dow futures here have done, are doing. Trading out right now at 13,227. Now, when we take a look at the Dow futures contract, looking at the daily chart out here. In the daily chart, I'm drawing an area of resistance. And what the Dow futures did on Friday is it got up above that area. That area of resistance that I've drawn goes all the way back here to the March 16th date. That March 16th date, you had a high of 13,224, low of 13,157. What it created out there, excuse me, was a shooting star candle. And that shooting star candle, the top of that being an area here of resistance. You can see how that area has been tested on several occasions. It was tested on March 27th. The area held. It failed. It was tested on April 2nd. Got up into it, failed. It was tested here for 3 days in a row. May Day, May 1st, May 2nd, and May 3rd. So that area, excuse me here, that area here has held very good as resistance. What happened? You got up, let's see, the close of Friday, no, the close of Thursday, I should take that back. The close of Thursday, 13,225. The top of that shooting star is 13,224. Gets above it by 1 penny out there. And so that high, now obviously what it's also doing here, folks, is, you know, this is the range. It's also testing the high that was established here on May 1st, that high of 13,284. Hasn't tested that area. It wants to test that area. It wants to get up and test that area. But what you can take a look at is if you have a real breakout here, you know, you'll break out and you'll close above 13,284. Then what that sets up is you don't really have any other real resistance areas here on the Dow futures. You know, we can take a look at the index, and it's doing it as well. But when you take a look at that, folks, you know, that is where the line in the sand is drawn out there. That's on the Dow futures. Let's go take a look at the NASDAQ futures, see what the NASDAQ futures are doing. They have got the strength in the marketplace. You know, for a while they were weak, and now they are the strong dog out here. Now, if we take a look at the Dow futures, what it had a little doji candle going back into March 27th, said it was going to take a pause. That's what it did. Following candle set up a bearish engulfing. That candle is on March 28th, the high out there, 27.90.25. That area has been tested. It wasn't tested as much as the Dow futures were, but still was tested on April the 3rd. You're trading inside April 3rd right now. You are trading inside that bearish engulfing from March 28th. That level of resistance is 27.90.25. You close above that, then what you have, folks, is you've got a breakout, at least as far as back as we've gone and taken a look at on the NASDAQ futures. If we go take a look at the ES Mini, we take a look at the ES Mini. The ES Mini doesn't have a bearish candle out here. All that the ES Mini has is a swing point. It's got 2 swing points that it's dealing with now. It's dealing with April 2nd. Now, the April 2nd swing point, folks, the high there, 14.1775. While we were sleeping, you had the ES Mini get up to a high of 14.18. Got up to, let me make sure it was 14.18. 14.18. Closed below it, so it's tested a swing point. And only, but what you can see about this swing point here, not really much in the way of testing from the standpoint of it being a resistance area. So it is a swing point. We know that that's an important test here. It's got the next swing point just to the left, that March 27th. Remember, we're looking at March 27th on the DAX. We were taking a look at March 27th on the FTSE as well. March 27th, I think, is also a critical day here. The high there, 14.1975. If this market's got some legs to it and it's going to get up above resistance, and what you'll look for is you'll look for a close above 14.1975. Let's go take a look at the Russell 2000. Let's go ahead and finish this off here. Again, we're looking at the daily charts. If we take a look at the daily charts, what you can see here is you can see an evening star candle formation. That's a 3-candle formation. That took place on the sessions of July 3rd, July 5th, and July 6th out there. That top has not been tested. Now that area, this shooting star, folks, what that was doing, that was coming into this shooting star, this evening star was coming into this shooting star area. And why do we want to take a look at that? It's really important to understand where you've got areas of resistance out there. Why? Because you're going to learn from failure, you're going to learn from success out there. If this market is going to break, what you're going to do is you're going to see not just a close above the July 5th high, the high of that evening star, that is 820.50. You want to see a high of the shooting star. That's the May Day. That is 829 even. Steven, 877-927-6648. We get back, we'll go take a look at how these markets are going to pop. Coventry Health, that is popping after a buyout, and Lowe's trading to the downside. Missing numbers this morning. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got the Dow off 23 points, S&P off 2, Composite off 4, Russell 2000 down 2.5, Microsoft down 20 ticks, Intel off 12, Google off a couple bucks, Apple up and out of here, trading out at 653.94 right now. That's up almost $6. Pop into the upside, you have Coventry Health. They are being acquired by Aetna. And the stock here, I believe it's a cash stock deal. You got the stock trading up a nice 18% this morning, out at $41.45. Right behind them, Apple up $6. Behind them, Wynn Resorts up $3.75. Las Vegas Sands up $1.77. Aetna also, that's nice. Aetna also trading up on the buyout. They're up 4.5%, up $1.70. Francesca Holdings up $1.24. HealthNet, HNT, up 87%. That's 87 cents. I'm sorry about that, not percent. That's up 4% out there. Ross Stores, ROST, the ticker symbol, they're up about 1.5%. HealthNet, HNT, they're up 3%. Melco Crown, MPEL, up 5.7% this morning. That is what is popping to the upside. To the downside, rocking to the downside, you've got Rock Tennessee Company, RKT, down 4%. They're down $2.50. Best Buy, BBY, they're off about 6% this morning, down $1.28. You've got ZAG Inc., ZAG down about $1.25. Interesting. Google down $3. It's down only about 0.5%. Lowe's coming out with numbers, missing they're coming out with results, missing their numbers off 4.7% this morning. We'll take a look at that. Baidu trading down. Waste Management, WM, traded off 2.5%. International Paper, IP, off a bit. LinkedIn, LNKD, they're trading down 0.5% this morning. Not a lot moving out there big time. We do have King Dollar here on the screen on Tiger TV. So let's take a look at the U.S. dollar index. U.S. dollar index, folks, making that beautiful 3 drive to a bottom pattern. You're taking a look at that here. That first drive was on July 19th. The second drive, July 27th. The third drive, August the 7th out there. 2 beautiful 1.272 expansions of swing points, and this is the way that it should be done here, because you were doing that, you were coming up against a 0.786 retracement, you were coming up against a 0.382 retracement. It had everything that you needed. That swing point from August the 7th here, that had volume of 15,000 contracts. It was tested on Friday with 19,000 contracts, tested this morning. So far this morning, only 5,300 contracts, but the area, the swing point high, is 82.43, been tested several times. So not only do you have an area of resistance as a result of this 3 drive to a bottom pattern, you've got an area here where this swing point, this little sideways move here, has been tested. It's getting ready, folks, to take off. It's ready for a little lunar mission, because we did have new moon come in on Friday of last week. That was on the U.S. dollar index. Let's go take a look at some of these stocks here, popping and dropping. We might as well start with Apple. Let's go see what Apple is doing. Now, as we talked about, when you have a failure, a 0.786 Gartley failure, that typically sets up what? It sets up a butterfly, 1.272 butterfly pattern. Right now, what Apple is doing, it's up and over. That 100% move, it got up over there on Friday. The volume, now, when you take a look at it, the volume from the April 10th swing point, because that's what it was going against, that swing point volume, 31 million shares. When you got up and over it on Friday, you did it with 15 million shares, folks. This now is setting up what looks like a tiger butterfly. That's a beautiful thing. So now let's go ahead and complete that here. I'm going to go ahead and erase the Gartley pattern that failed. Now let's go draw the butterfly pattern in there. Now we'll go ahead and blow it up on your screen. And in order to take a look at a butterfly, maybe you don't have the same tool that I've got, but you can still draw them in on your system. And so what you'd be looking at, folks, you'd be looking at the swing point high. Again, that high is 639.84. That is on, well, let me make sure I've got the right swing point high. April 10th. Swing point high, 644, even, Steven. Okay, that's your swing point high. Your swing point low that you're looking at came in, let's see, May 17th was 530.12, 528.66 on May 18th. So you just simply want to go ahead and take from the high to the low, take that swing point, multiply, take that dollar difference, multiply times 1.272, add it to the low, and that's going to give you your price projection, which is going to be in the 675 area. So 675 is where you'd be setting up your 1.272 butterfly. And right now, what it looks like, folks, it looks like it's setting up a tiger butterfly. Why a tiger butterfly? Because you have crossed the X point. That X point is the swing point also of April 10th, and you've done that with lighter volume. You stay lighter than 31 million shares as you from here until the price point of 675, which really, Apple can do in the next couple of days. That sets up your butterfly sell pattern on Apple out there. Let's go take a look at Google, see what's going on with Google, see if the pullback here is light. GOOG is the ticker symbol. I believe that had gotten up over some swing points, or maybe was taking on some swing points. Let's go see exactly what Google was doing. So as we take a look at Google, we're looking at the swing point going back to January 4th. It got up and over that area. Let's see what kind of volume it did as it got over there, and then we'll go ahead and we'll pull back even further, see what else is on the left-hand side of this chart. Let's take a look at the swing point volume on January 4th was only 2.8 million shares. So as Google got up and over that area, well, I've got to draw the line, though. Let's actually go see what it really crossed with here. Okay, so it crosses over last week, looks like Thursday. Does it with 1.7 million, that 1.7 going against 2.8. Not enough volume. How about on Friday? 2 million, 2.1 versus 2.8. Still not enough volume. So it looks like Google trying to trade back, potentially get back inside the range. The range would be that swing point from January 4th. You're going to want to note that on your charts as well to see if that area now acts as a support level or if Google just simply comes back inside a trading range, a nice trading range, by the way. That trading range from these highs of 670 all the way down into the 560 and change range. So that's an important chart to be paying attention to today. Let's go take a look at Wynn Resorts. Wynn Resorts trading up here about 2.5% this morning. WYNN is the ticker symbol. See what is behind that move. Let's see if there's any news or anything related to it on Wynn Resorts. I don't see anything. So you got Wynn Resorts gapping up this morning, trading at the lows of its session. So it's right now selling off. If we take a look at Wynn here. Wynn had been certainly traveling in a sideways consolidation. What set up that consolidation is the June 21st high at 107. You also have the high from June 7th out at 107 even. So you're up and over that area today. Let's go see what Wynn is trying to do. Let's take a look at the AB equals CD structure that Wynn has. It's got a nice hammer candle. That came in on July 26th. The low there, $90.11. That's your A point on Wynn Resorts. Your B point is going to be the swing point that came in on August 7th. As Wynn made a high, it looked like it may have gapped up. There may be a little open gap up there on the August 7th candle. That high was 104 even, Steven. The C point only pulls back. Looks like about a 38% retracement. We'll go take a look at that. That retracement day, or the C point, August 15th, when it gets to a low of 99.09. Now, let's go take a look at the swing point, the B point out here. Again, that is the August 7th, 3.4 million shares. Let's draw the lines across. Let's take a look at volume as it's coming through that area. And what we can see is you got up and over that B point on lighter volume. So you do not have a confirmed A to B equals CD out there. However, you did have a gap up this morning. Let's take a quick peek here. Let's go back and see if this is the first gap here was on August 6th. So August 6th, the high 98.63. The low is 98.81 on August 7th. So you do have the second gap in play here on Wynn Resorts. What does that set up? That sets up you want to be watching Wynn Resorts because there is a nice downdraft resistance area here where you also have a gap down. So you got your open window. So the open window here on Wynn Resorts, looks like you've got several of them. But the one that we're taking a look at is going to be the May 8th candle. The low of that is 116.35. The high is 123.25. You know, look for Wynn Resorts on a possible three-gap play, which would be no problem because that first gap, not very large. This second gap here this morning, the high of Friday's session was 105.38. The low was 107.06. In fact, you know, if you don't write it down, I am at least going to write it down and look for a three-gap play on Wynn Resorts. Let's go take a look at Priceline. Priceline trading down $6 and change right now. Let's go see what Priceline is doing out here. This is a stock that has had lots of problems. I know it's trying to crawl. Whoa, sure does. Let me refresh my screen, make sure we've got it out here. You talk about gaps and you talk about volume. Give me a second here to, where is it? There we go. Okay. So we're taking a look at Priceline, folks. It's trading out at 582. Do not step in front of this equity. It's got some volume where it gapped down here. It did that gap on August the 8th, and it's a wide gap. No telling how high this may get into that gap. It's actually back below it. So let's take a look at it. The high of the gap, and what I'm referring to, folks, I'm referring to the candle on August 8th. That high is 586.97. And when you came down with 6.6 million shares. Now, on Thursday, that area was tested with 1.3 million shares. Again, the high 586.97. You close out at 586.79. You then tested here. You get this little doji candle on Friday. Let's see, Friday's close looks like it was just above it. You're trading back inside there right now. It's not necessarily a short right here. Not necessarily. Take a closer look at this. So if we take a look at the original gap up, now what I'm doing, folks, just kind of going back here into this April 27th area. But that gap, I don't take a look at that gap any longer just simply because that window, it got fixed. You know, that gap was fixed when you had this gap down and you blew through that on August the 7th. So I'd have to go back and take a more of a study. But Priceline is not a stock chart that you want to get in front of here right now. Let's go take a look at Rock, Tennessee. RKT is the ticker symbol. They're getting a little rocked this morning, and they're down a few percentage points. RKT, let's go see what this is trading into. Doesn't look too bad here so far, except it's going into this high volume swing point that it's got. So RKT is the ticker symbol. Okay, so this thing is giving you a couple of signals here off of the highs. If you take a look at the Rock, Tennessee, makes a high March the 13th. Does it with 636,000 shares. Then about 3 or 4 trading sessions later, boom, kabosh. You make a gap down. You do it with 2.8 million shares off of the high. Now, at that stage, you know, what you could take a look at is, you know, you would want to go against, well, no, this thing had gapped down before on January 24th. So, you know, this is already giving you the signal that it was time to exit this stock here, and it would have been nice to have exited that stock because at that time you were at the $68, $69 level. This thing comes down and makes a low on June the 4th at $50. Now, what's it doing here this morning? Looks like this thing has a habit of gapping down. I don't see a lot of gapping up, but it sure does like to gap down. If you go back and take a look at it in September 23rd, you know, it gaps down. Gaps down again here on January 25th of 2012. Gaps down again on March 15th. Gaps down over here on June 22nd. I do see a couple of small, you know, gaps where it's gapped up here. In fact, that's really where you'd be taking a look at the next level of support. That is on Rock, Tennessee. That level would be the 59.18 mark, and I suspect that that is where it is headed to. And what you'll also see is this high volume swing point low out here from July 25th with 3.5 million shares. The top of that candle, 60.61. Let's go take a look at, what do we want to look at here? Let's go take a look at ZAG. ZAG is getting the zigzag treatment here, down 13% this morning. So let's go see what ZAG is doing. I believe ZAG is one of the suppliers to Apple. I don't recall if that was software or what it was. We'll go take a look at it, actually. That way I can give it to you. Maybe it was the cases. ZAG is the ticker symbol. I remember at one point I was in a trade on ZAG. So let's see here. ZAG is they design, manufacture, and distribute protective covering audio accessories and power solutions for consumer devices. So on the Apple side. Now, ZAG truly getting the kibosh here on August 3rd. Take a look at the volume in that candle. August the 3rd, gapping down with 3.8 million shares. You've got your second gap down here today. What that is trying to do is go back here. It already is really testing, trying to get back and test December 29, 2011. That's 2.4 million shares. But today, you've already done 1 million shares. The market here only being open for 18 minutes. So that is going to go back and test that area. Let's go ahead and see what this is doing. So if you take an area, take a look at the support. You've got this support on the daily area, which is where it originally broke out. Now that volume, nice volume for sure, 9.6 million shares. So if you want to ideally find where you've got really what I'll call 2 support levels. The first support level on ZAG is going to be the low of that gap up candle. That is October 15th. Let me make sure it's October 15th. Let me just widen this up here. I want to give you the right date. Okay, so that is October 14th. So the low there, 624. Now you can see that level here was tested coming back into the March in the 2011 time frame and held. That gap is still open. Your next level of support really is the high of October 13th. That high, $5.68. Of course, right now it's trading at $7.32. Be careful if you are in ZAG. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks, and it is Marvelous Monday. So after this show, we've got Tom and I doing the Money Master show. Then we go up, I believe, to Basil Chapman up to Newton, Mass. from 11 to 12. Larry Pesavento today, 12 to 1. Daryl Martin, 1 to 2. David White, 2 to 3. Ken Shreve, 3 to 4. And the Tom O'Brien Show, 4 to 6. 9 hours, folks, of wonderful programming, education here at TFNN. Right now, what we've seen the Euro do here on the 30-minute chart is bounce to that normal retracement area. That was after making this little bull sash candle here that came in as we were coming on the air at 9 o'clock this morning. At 0.382 level being 1.233226 out there. 223 was the actual number out there. And so expect that the you'd see the euro get up into the 0.618 area, 1.23, and I wish I could see. It looks like 397. That would be the mark that you would be looking for. That would be a natural retracement up there. In fact, if you don't see it, that spells some real trouble there in Euroland. Now, if you take a look at the 30-minute chart here, you can see where the bulls stepped in. Whoever they were, they stepped in at 9 o'clock on August the 16th. You're looking at that wide-ranging bar out there. So far, each time the euro has gotten down into that level, the first time was on Friday morning at around 11:30 as it came down to that area. That area held the support. Again this morning as it came down into there, was also testing the swing point that was established last Friday at 11 o'clock. And so you can see that is your area of support out there. So that's, if you have the euro on your charts, that's an area that I would simply draw in as an area of resistance, of support, I apologize. Now, what we're going to do is just simply go back to that ES Mini here real quickly. The ES Mini, as was coming down, making, again, as we talked about, as we were coming on the air, coming on, during that 9:30 session, making a very important area of support on the 30-minute chart. Why? Because you had a 1.68 expansion of swing point, a 1.272, and you had that 0.382 level off the most recent, what I'll call significant low out there on the 30-minute chart for sure at 10:30 in the morning on August the 16th out there. Now, as it came down there, as we're coming into that 9:30 level, makes a doji pattern. All that was telling you is it's time to rest, the kind of what you have equilibrium between the bulls and the bears. So it didn't give us any information just yet. However, as we come into the next 4 minutes here, we could be getting a little bullish engulfing candle at the area here where we had some support. What's that set up? That sets up a run back to the highs that we saw that the ES Mini made coming in at 5:30 this morning, up at the 14.18 all the way down to the 14.16 level. But you still got 3 minutes left in the session. Right now you've got the Dow off 9 points, S&P off 1, Russell 2000 leading the charge on the way down about 0.5%, down 3.7 points out there. Let's go take a look at a couple ETFs. Let's go take a look at the S&P sectors. Let's take a look at the energy sector first. No, let's take a look at the financial sectors because that's what popped up on my screen. You've got the XLF trading out at 15.17 right now. Now, when you're taking a look at the XLF here, it's a little bit more complicated than just simply only using the data on the left-hand side of the chart because they have had a reshuffling of equities within inside there. So it is better to actually go over to the Spiders Trust, SPDR, and you can get the exact holdings as in the weighting as of Friday's close. But what it is doing is going into this little gap down which exists on May 4th. The high there is 15.27. You're traveling inside there right now. You're trading at 15.16. I suspect that is the area that the XLF wants to test out there. If we take a quick look at the XLE before we go to break here, the XLE trading right out at we're trading out right now at 72.48. It has a 0.786 Gartley sell that is still in play out there. Thanks so much for joining me here, folks, today. Stay tuned. Tom and I will be up next. If not, and you're starting your Monday, have a great day. I'll look forward to seeing you tomorrow morning. Take care, folks.